Hello friends, we are going to continue with share capital, and in the last lecture we started with a very important topic of share capital, that is forfeiture of shares, right? And to explain forfeiture of shares, I took an example where one person, he subscribed to all the 10,000 shares of the company, right? He paid the application and allotment money but failed to pay the first call. Second call was not made by the company, right? This example we did. Then what happened? Once he failed to pay the first call, company sent him a notice that pay within 14 days. The person still fails to pay the first call. Even after a notice of 14 days, the person did not pay the first call. Then what the company did? Company cancelled the subscription of that particular person. They say you are no more the shareholder of the company. We cancel your subscription. Right? Then we see what are the effects of cancellation of subscription. Those are the thumb rules. Right? So what was the first effect or the first thumb rule? Share capital will reduce. If it is reducing, it will be debited. Right? This is what we discussed. And what is the amount that will be debited? The amount is number of shares multiplied by amount called by company. Amount called up. If the second call is not called up, then you are not going to consider that second call amount. Whatever amount has been called by the company, only those number of shares will be taken. Right? Then, what is the second one? Amount already received, that is amount received on application, allotment or some other call. Amount already received will not be refunded. What it will be done? It will be transferred to a separate account known as forfeiture account, or I can say forfeited shares account. Forfeited shares account. Now what will be the amount? Amount will be number of shares multiplied by amount already received. That means if you have received application money, right? If you have received application and allotment money, then the sum total of that amount will be taken as amount already received and it will be transferred to forfeited shares account. Clear? Then third effect. Third was calls in arrears. Calls in arrears account will be closed. Right? If you have not opened the calls in arrears account, then it will be specific call account. It can be either first call, second call, or whatever call that we have not received, that call account will be taken here. We have to close this account, and to close this account, it will be credited. This forfeited shares also will be credited. Now what will be the amount? Amount will be number of shares multiplied by amount called but not received. Clear? So these are the three thumb rules of forfeiture. Share capital will reduce. If the share capital is reducing, it will be debited. What is the amount? Number of shares multiplied by amount called up. Right? Then amount already received, the amount which has been already received will be transferred to a new account that is known as forfeited shares account. This account will be credited. Amount is equal to number of shares multiplied by amount already received. Then the third effect is calls in arrears. First we have discussed the total amount that we are cancelling. Then out of the total amount, whatever amount we have received, we set that as forfeited shares account. Right? And what amount we have not received? In that case, we will credit the calls in arrears account or the specific call account. Specific call account in the case where you are not opening the calls in arrears account. Right? What will be the amount? Number of shares multiplied by amount called but not received. Right? So here what is important to understand, to identify in a question is what is the amount called up. These things are important to understand. What is the amount called up? What is the amount received? What is the amount called but not received? If you are able to find that in a question, then it is a very simple case. Right? Then I told you that this forfeiture is for two types of shares. Shares issued at par and shares issued at premium. Clear? The forfeiture is for two types of shares, the shares issued at par and shares issued at premium. Now in this lecture, we'll just do shares forfeiture, forfeiture of shares issued at par. Right? Forfeiture of shares issued at par. The journal entries will be exactly the same that we discussed in the last lecture for at par. Right? Let us do a practical problem on this and you will be able to understand all the concepts. Right? See, XYZ Limited issued 5,000 equity shares of ₹10 each at par payable. On application ₹2 per share, on allotment ₹3 per share, on first call ₹3 per share, and on second and final call ₹2 per share. Mr. X was allotted 40 shares. Right? Give necessary journal entries relating to the forfeiture of shares in each of the following alternative cases. Case 1. Mr. X failed to pay allotment money and his shares were forfeited. He failed to pay allotment money and his shares were forfeited. So how much money we have received from him? ₹2, application only. We called for allotment money but he didn't pay and immediately we forfeited the shares. How many shares? 40 shares. So let's pass the journal entries regarding this. Case 1. What is the account that is to be debited? Share capital will reduce. Right? So I will say share capital account debit. Now with what amount it will be debited? 40 shares multiplied by what is the amount called? This is important. Now see, they called application ₹2 per share. He paid the application. They called allotment money of ₹3 per share, but he failed to pay allotment money. And immediately after failure to pay allotment money, his shares were forfeited. Now will the company make the first and the second call? No, because his shares are forfeited at the time of allotment only. So the company has not made the first call and the second call. So what is the amount called up? 2 on application and 3 on allotment. Right? So total 5 is called up. So 200 rupees. Now, two accounts to be credited. Two forfeited shares. Now, what is the amount in the forfeited? The amount that has been already received by the company. Here he failed to pay allotment money. Before allotment, he has paid application money of rupees 2. So this rupees 2 that we have received, we will not refund these rupees 2 to the shareholder whose shares have been forfeited. Instead, we will transfer those shares to a separate account known as to forfeited shares account. Then to calls in arrears or share allotment account. Right? How much? On 40 shares, you have not received rupees 3, 120. Clear? Case 1 is clear. What is the called up amount? It is clear. See, the company called for applications. He paid the application money. Company called for allotment money. He didn't pay the allotment money. At that time only, the company forfeited the shares. The company did not wait for the first and the second call. The company did not make the first and second call. Clear? Now, next part. Mr. X failed to pay allotment money, right? And on his subsequent failure to pay the first call, his shares were forfeited. Try to understand, Mr. X failed to pay the allotment money. The company did not forfeited the shares. What the company did? Company called for the first call also. First allotment money was called. He did not pay. Then the company called for the first call also. He did not pay. After the failure to pay the first call also, then the company forfeited his shares. Right? Now, case 2. Share capital account debit. Now, what will be the amount? 40 multiplied by amount called up. What is the amount called up? 2 on application, 3 on allotment, and here the company has called for first call also, 3. 8 rupees have been called up. Clear? So 320 rupees are called. Now two accounts, to forfeited shares. To forfeited shares account. The amount that has been received by the company received only the application money. So 80 rupees have been received. And to calls in arrears account or share allotment account and share first call account. Right? So either you will write calls in arrears account or you will write share allotment account and share first call account, because there are two calls that are pending. Now what is the amount that is pending? On 40 shares you have not received 3 on allotment, plus on 40 shares you have not received 3 on first call. So 240 rupees you have not received. If you post these two accounts, then it will be 120 and 120 this way. If you take calls in arrears account, then it will be the sum total of the calls that have not been received. 40 on allotment, 3 rupees on allotment and 3 rupees on first call. Total 240 you have not received. If you are crediting the separate call accounts, share allotment account or share first call account, then it will be 120 each. Clear this much? Case 2 is clear. What is the amount called up is clear. The company did not call for second call because company forfeited the shares before the second call. After the failure to pay allotment plus the first call, the company forfeited the shares. They did not make the second call. Right? Now, case 3. Mr. X failed to pay the first call, and on his subsequent failure to pay the final call, his shares were forfeited. That means Mr. X paid application money plus allotment money. He failed to pay the first and the second call. Right? What is the amount called up? Can you tell me? In this case, the amount called up is 10 rupees because they have called for second call also. He failed to pay the first and the second call, but the second call has been called by the company. So, account debited will be share capital, account debit, okay, share capital, account debit. With what amount? On 40 shares, you have called the whole amount, 400 rupees. Now, to shares, to forfeited shares account, now how much money you have received in this case? On 40 rupees, you have received application money of 2 and you have received allotment money of rupees 3. So total 5 rupees you have received. So whatever you have received will be transferred to a account known as forfeited account. So 200 will be transferred. And what will be to calls in arrears account? What will be the calls in arrears account? Whatever money you have not received, on 40 shares you have received 5 rupees out of the 10 rupees and you have not received 5 rupees. Clear? Now the concept of called up is clear. What is called up? What amount is received and what is not received? Right? Share capital will be debited with the amount that has been called up by the company. Forfeited shares will be credited with the amount that has been already received by the company. And calls in arrears will be credited with the amount that was called up but not received by the company. Called up but not received. Clear? I hope this basic concept of forfeiture is clear. Right? So this was forfeiture of shares which were originally issued at par. And I told you there are two cases, the forfeiture of shares originally issued at par and forfeiture of shares which are originally issued at premium. Right? So friends, if you have any queries, just send me an email at ksjteaching@gmail.com. In the next lecture, what we are going to do is forfeiture of shares. Forfeiture of shares originally issued at a premium. Right? So this is what we are going to do. Forfeiture of shares originally issued at a premium. Right? So that's all for this lecture, friends. Thank you so much.